Welcome back, Tavi.
Hi, Dale. How are you?
Oh, everyone's trying to find their bearings. We haven't seen this type of action last week. I believe, wasn't it the fastest 10% correction in market history?
Yeah, one of them.
Okay, so I don't remember from our last interview, Tavi, but do you want to share your screen, or do you want me to show the different
I
instruments
personally
that we're
don't have
talking?
anything to share here unless,
Okay, then
but
I will.
okay.
Okay, so I'm going to share our screen. Why don't we start with the S&Ps, Tavi? So just to let people know, you're a hedge fund manager,
Mhm.
and here's your company, Crescat Capital,
Mhm.
and you mainly work with accredited investors, right?
That's right.
All right, what's a new requirement for accredited? Is it a 250,000 outside of your house, or
It's actually a million. Yeah.
it's 1 million now?
Yeah. Uh-huh.
Oh, okay, so you have all different types of funds. Why don't I start with this? Was your long short fund the most? Which one of your funds had the best week last week?
Global macro fund was up significantly last week, and that's because we're being able to implement what we call the macro trade of the century, which is being long gold in renminbi terms, and long gold in dollars, and long gold in Hong Kong dollars as well,
Okay,
relative to being short stocks. And that's, obviously that was a we got hurt on precious metals, but I think the gains from the shorts, offsetted that pain. And I think this week has been going a little bit better, at least yesterday. Today, probably going to be a pullback, given how the market is reacting from the Super Tuesday.
okay. So this definitely changed the character of the market that has been ongoing for quite some time. Although we've had these interruptions before, maybe back to the end of 2018 when all the former Fed chairmen got together with Powell and they all held hands, remember, Tavi, and they sang Kumbaya, and Powell reversed course, and we had a short squeeze all last year. Do you think this is just a pause that refreshes, or is it perhaps the beginning of a bear market? And I only say that because of this formation, which is a megaphone formation, Tavi, that we took out. We had an overthrow. Now we're trading back inside of this megaphone formation. And if it's valid, if you look at the bottom of my line, it's possible for us to see a 2000 SPX. Am I, way off base here? And this is the buying opportunity of the century, or should I be raising cash on strength and looking for more shorting opportunities? What do you think?
Yeah, that's a good question. I'm on the camp that I think this is the beginning of a bear market, and I've been in that camp for a bit, given how macro indicators have been deteriorating for some time now. From that perspective, I think that why the market hasn't really turned was because of the labor market and consumer confidence that held up pretty well in 2019.
Yep.
Right, even before the coronavirus situation, we saw equity earnings beginning to the growth begin to contract instead. We've had the yield curve inversions reaching the 73% level. We've had jobless claims, continuing jobless claims begin to rise on a year-over-year basis. All those are cracks in the labor markets, and the venture capital activity that began to slow down significantly. I think that now with the coronavirus, that's just the tip of the iceberg, especially when it all started at the worst place at the worst time. I mean, there's never a good time and a good place for that to happen. But China truly is the place that it was holidays in China. It was the time of the year that the Chinese people spend most money, and obviously that wasn't the case. At the same time as we have perhaps the largest credit imbalance that we have in the world today, historically speaking. I think that China being responsible for over 60% of GDP growth since the global financial crisis, I believe strongly that that's going to have an impact. And now the outbreak is really global now. It became a pandemic, and especially in places like South Korea, which is a key economy for the for the world. And every electronic piece is basically
They
made.
made my car.
Exactly.
Yeah.
You got Samsung, and so many other companies, and I think that's it's even worse than Italy. Obviously, we're talking about markets here, not about humans, but and which is awful. But I think it's getting worse, and I think the markets initially, I think that gold, especially in precious metals, the prior weeks were really being a precursor of this sell-off in equities, and then we had this sell-off in equities. Gold sort of got ahead of itself. Precious metals overall got ahead of itself in the short term with the CFTC positioning. You have RSIs getting an extreme, especially on silver. And I think that we're now resetting that position, and especially RSI, even in S&P 500 now, it's not as extreme as it was a few days ago. So I think we're resetting again. If you ask me, what's my favorite investment? It still is buying gold, buying precious metals, and selling stocks. Is that ratio of gold to S&P 500? I still believe strongly that that's going to be ultimately what continues to rise here. If you look, I published this yesterday, looking at a chart of silver to Russell 3000, just a broad way look at stocks in general, and you can see we basically just formed almost a perfect double bottom, and it's been rising and making higher lows recently.
Look at that. What a producer I am.
Yeah.
I'm not only an interviewer. Look at this. Here's Tavi's chart right here. Okay. Yeah. Silvered equities. Okay. Because that's interesting, because I mainly look at the gold silver ratio. And this is the opposite of what we've been seeing. And so silvered equities, when's the last time we were here? In 2000. Wow. Okay.
Yeah.
How do you execute a trade like that?
Well, there are many ways. The way we find more attractive is on the long side is to look for. We're not just long silver, by the way. We're long silver, gold, platinum. We're long a selective number of miners, which is an industry that's been historically depressed, and so it's more of a diversified way of being long precious metals, and hopefully hoping to find alpha here in this trade as we think this is going to play out well on the long side. On the short side, it's quite the same. We're looking for the most, rather than just shorting the S&P 500 or the Russell 3000, regardless what index you want to look at. We try to search for the most overvalued companies using our models and our process. And a lot of those are actually in the U.S. So the distortion of price to fundamentals are actually a little more extreme here in the U.S. In terms of banks overall, not really. The banks that we like to be short are banks in Canada, Australia, even China.
Commodity based, is that why? They're natural resource type economies. You would think that you would like those countries.
Well, I would, unless the problem is that number one, we try to be long oil, and I think the situation there is that coronavirus really changed the landscape for that. Okay. Number one, but in terms of commodities, of being long commodities and being short equities, we like first and foremost is precious metals, and Canada and Australia and Hong Kong have extreme ties with the Chinese economy, in which capital flows, outflows from China is exacerbating those markets, especially in the housing market of those places. And we believe strongly that has been reflected on the banks. And when you look at the banks, actually, the valuations and multiples look a lot like the banks here of the 07 and 06. Interesting. So,
okay. So the U.S. has cleaned up. A lot of the U.S. banks have cleaned up their balance sheet that a lot of these other countries never addressed in the Great Recession.
I'm not sure
2008, 9.
Yeah, I'm not sure if it was effect of they never addressed, but I think there's from economic cycles globally speaking, more globally now, there's always someone as a country that is at the center of the imbalances that we see. I think what is at the center this time in terms of credit is certainly China. It is the economic driver of the world. with the shrinking current account problem is becoming more challenging for them to continue to provide growth for the world. And you can see that by little things like not
Like how
little things,
about
but very
I'm showing the 10-year real yield in China has dipped into negative territory, a chart you have on your website as well, and looks like it's headed towards where it was in the depths of the great financial crisis, the Great Recession, all the way
correct.
to the left. So
Yeah.
if China's an engine of growth, why do they have negative real yields?
Yeah, well, because they can't grow and they have to continue to reduce rates. If you look at SHIBOR rates, which most of them, they're all manipulated, especially 10-year yields. Who buys 10-year yields in China, FYI? It's all.
Let me ask you this: who's going to buy 10-year yields in the U.S.? Here's just a look at a weekly chart of 10-year yields. To me, this looks like we're headed into some type of exhaustion.
Yeah.
What are you telling your clients as far as owning U.S. sovereign debt? Are you avoiding it? Are you taking profits on it? What are you doing here?
We might reduce a little bit on one of our lags in that trade, but what we've been doing is actually we've been sort of betting on the convergence of rates between U.S. and global rates in general. So when you look at the world today, you have about 17 economies that have their 30-year yields. 30-year yields are lower than overnight rates in the U.S. We thought that was a tremendous opportunity. When you look throughout history, that actually happened, that inversion, what we call the global yield curve inversion, actually happened in 06, 07, also happened in 1999 and in 2000 prior to those downturns in the economy. And what we've been doing is being short, let's say, German bonds, for instance, and being long treasuries. So it's one way, yeah. And you can see that if you like, and I know you do technicals. Go ahead and look at the German 5-year yield versus the U.S. 5-year yield, or I should say the 5-year U.S. 5-year yield versus German 5-year yield, and you can see that the spread between the two, when you look at the breakdowns on that ratio, it's incredible. It almost perfectly marks the beginning of a recession. So I think that's usually because the central banks elsewhere are usually late to the party. And in the U.S., money comes into the U.S., so you have a bid on the dollar, and it's sort of what we're seeing, I would say. But anyways,
do you automatically have a bearish view on the dollar because you have a constructive view on the gold, or could you be constructive the dollar and gold at the same time?
100%. If you think about mathematically, if you're long gold in dollars and you short renminbi, you're essentially long gold in renminbi terms. So it's not that we don't like gold versus dollar. We actually like that trade too. But we actually prefer also to add other trades like being long gold in the most overvalued currencies in the world today. And if they're pegged, that's okay. That means we're essentially long gold versus the dollar. But we're also adding this asymmetry to the trade that could happen in case something depegs, especially Hong Kong dollar and China, which when you look at currency crises in the past, they do have all the imbalances aligned and to have one. So, it's just it's a cheap way when you look implied volatility for those trades to put out a put option on CNH USD or HKD USD. It's very clear that it's not very expensive for you to get enough notional and delta notional exposure to your portfolio.
Okay, so we've seen the renminbi snap back here.
Yeah.
Do you think that this peak at 720 could have been it? Or do you think that, right here, that this could be a decent, buying opportunity in U.S. dollar yuan, looking for more yuan weakness down the road? So here's your weekly trend. What are you thinking here?
I actually really like trades that are the least clear trades in the world right now. And I think one of them is USD being long USD CNH because everyone is thinking the same. If the Fed is easing, and that should have an impact on the dollar. There's some sort of a constructive way of reducing the dollar power globally, and and that should have an impact on USDCNH going lower. I love
Okay.
that contrarian view, and I think actually it's quite the opposite. I think USDCNH has is in a pullback here, and I think it looks incredibly attractive as a trade to be long. There's a high probability that could unwind in a big way, and you don't have to be extremely big in that trade. I mean, the asymmetry is incredible. Not as good as Hong Kong dollar, I have to say, but I do believe though that this recent decline in the equity markets that we had, it's a complete change in regime in terms of volatility. And I think the investors are finally waking up to the risks that we're seeing in an overdue downturn in the business cycle. And I think the Fed is losing control of the situation slowly. We saw that clearly when they dropped interest rates and the market actually fell apart significantly. And the conventional view that the central banks can prevent recessions has been proven again to be a complete fallacy. And then I think that further easing is inevitable, especially from the PBOC side as well. And the scenario is just incredibly bullish for gold, regardless what currency you want. From gold and renminbi, gold and Brazilian real and Canadian dollar and Aussie dollar, you name it.
Can you think of one bearish fundamental for gold?
Sure, I do. I actually think that if the renminbi falls apart in a huge way, I think that could be deflationary. And also,
Why would China sell some of their gold reserves to defend their currency?
I don't think so. I think that they would. I think a lot of their reserves is encumbered, to be honest. But that's
Okay.
my view on that. I think the issue with that is just I mean, it's a manufacturing plant of the world. So anything
Right.
that is built there, and everything is if the yuan devalues significantly, I think that will have an impact in the world. But another one is the coronavirus, which is the jury is still out. Is it a deflationary and inflationary? If you looked at inelastic products like food, water, you have to buy regardless.
Right.
Those things are probably going to rise, and that's food inflation.
Right.
So CPI for food is going to be rising likely. And if that plays out as is playing out in South Korea, in Italy, we don't know yet what's going to be the case in the U.S. I have a feeling that the same way the market was ignoring coronavirus a week ago and all of a sudden just started to price that in, I think we're also sort of ignoring the fact that there has been a lack of tests on patients in general, and we might have a lot more cases than we think we do. And I think that is also not priced in the markets. But you're right about the Bernie Sanders elections. That definitely takes a little bit of off the table in terms of risk. Biden is a more centric candidate, and that would be a little bit of a takeoff risk.
What do you you sound very concerned about the coronavirus. You're here in the U.S., right, Tavi?
Yes, I am in Denver,
Okay.
Colorado.
Right. What are you doing to prepare for it with your family?
Look, I'm not doing anything.
Did you go out and buy like a whole pallet full of toilet paper and bring it home?
No, I did buy more than I usually buy. My wife already always had a stock of things
Stockpile.
like that. But
Yeah.
in terms of food, I did intentionally buy more than I usually buy. But I eat a lot of rice, so might as well just buy rice for the next
Yeah.
year or so. I mean, it really cost me not much to do that.
Right.
And so I did a little bit of that. I've been just reading, about that doctors of how to not get infected in terms of washing your hands and
Yeah.
taking vitamins and things like that. So I've been taking care of that. But yeah, I'm scared. I think it's a big deal. And I think, unfortunately, around my circle of friends, I'm not seeing this as a big deal. I think it's a big deal for market participants. A lot of people have been sort of watching that more. The
Yeah.
people that are outside of the markets, they're not even talking about that. It's been sort of a joke, really. I mean, a lot of people have been joking about it when it really shouldn't be a joke. It's
Well,
a
I don't
very
know.
serious problem.
They're emptying out stores here at Costco, and so I think there is a little bit of panic beginning to set in. And have you heard my poem about coronavirus?
No, it did not. Would
And you
love
could
to.
put it on your website
All right.
or write a rap song.
Okay.
Corona, Corona, fear that I'll own you. born in a lab in China, spreading so I'll find you. Known as safe, not even a king, and I'll be the excuse for everything.
Wow.
Huh?
Did you just do that?
Yeah.
Wow.
You like it?
Yeah, I did.
Anyway, I don't know what I'm doing in the markets. I should
No,
be a
it's
Nobel poet laureate. But anyway, that really the key line in that is it will be the excuse for everything.
yeah, I agree
Don't
with
you
you.
think?
I think it could be the thing that pops the entire bubble. I mean, there are so many reasons for why the bubble could be popping, and it hasn't yet. I mean, you look at numbers. I suggest everyone to look at things like numbers in South Korea, Japan, and even in the U.S. in terms of macro indicators. Prior to coronavirus, everything was turning lower, not higher. Look at the GDP number for the fourth quarter of Japan,
Yeah.
and by that you can only imagine how much it would be the pain, economically speaking. This is the worst time that could ever happen.
Yeah.
The
And
macro
let me validate that from last time you were on, Tavi, and I don't know how many months ago it was, that your narratives that are working now were already working before the coronavirus hit the headlines. So maybe this is just a catalyst and some type of rocket booster for what was going to happen anyway. And again, this is just the excuse of what was going to happen anyway. What do you think?
I couldn't agree more. I mean, we build a lot of macro indicators and macro models to help us to identify where we are in the cycle. And I believe strongly we're at the very peak of the cycle. It's exactly why we like things like precious metals right now. And I think that it's an interesting setup when you have precious metals being so historically undervalued, when you find stocks being so historically overvalued. It's what I call the battle of extremes, and really is. And I think that the unwinding of that has just started. So.
Okay, well, Tavi, there you are. There's Tavi right on my screen. Happy, great smile. Smiles everything. And you're my trading warrior brother, Tavi, and I, wish you a lot of success and that your family is safe and healthy, and that you guys can help people prosper during what may turn out to be a very serious crisis in terms of financial markets. So thank you for being with us again today, Tavi.
Thank you, Coach. Same to you, and I hope you stay safe as well, obviously. And it's always a pleasure to talk to you. Thank you for having me and for an invitation. I enjoy talking to you.
All right. Well, thank you for edifying us and some very interesting charts that you showed, that silver ratio to stocks. And I didn't know that China was in negative yield territory. So I learned from you today, Tavi. Thank you, my trading warrior brother.
Thank you. Take
All
care.
right, everyone. So that's a wrap for us. We'll see everyone tomorrow. Good hunting the rest of the day. Remember, don't just count your pips, count your blessings. Hope everyone stays healthy and continues to trade and continues to be a warrior. Adios, everyone.
Bye.
Thank you, Tavi.
Thank you.